Well, for more on the prospects for Britain's housing market, David Tinsley, UK economist at National Australia Bank, is in London for us. Thank you so much for joining us. Now, we were just hearing from our economics editor actually how diverse the forecasts are for the housing market for this year. How do you expect it to do, and what exactly in terms of indicators are you looking at? How do you assess it?
Well, we've got a forecast of a flat to falling housing market in terms of prices this year. I think we've got a central forecast of a decline of 4%. Obviously, it depends on what measure you're looking at. And we'll be looking at all the regular measures of mortgage lending, mortgage approvals, and the RICS, the surveyor surveys of the market, to refine those forecasts across the year, really.
David, in terms of what the worst we can expect for 2011, is the housing market, with a potential fall in prices, going to be an indicator of what we can expect for the year to come?
Well, I think the key risk for the housing market is the key risk really for the UK macroeconomy this year as well, is that we're poised on a potential risk in the UK of a worse inflation, lower growth outcome than many would like, which may force the Bank of England to move earlier than the market's been previously expecting on interest rates. And then the housing market really will be then caught between slow income growth on one side and also rising mortgage rates on the other. So that's a sort of key risk to the housing market, and so I'd say that the risks are on the downside overall.
So how much do you expect the Bank of England to actually make a move, and by when? Are we talking early summer or even sooner?
Well, our central forecast has them moving in May, and not to any great degree, really 25 basis points, ending the year at about 125. But there's some chance that it might come in the summer months, of course. I think the data over the next few months is key here. What's happening on the VAT hike, how that's feeding through to consumer spending, what the Q1 and Q4 GDP figures end up looking like, those sorts of things are key.
But it's a pretty bleak picture if you look at VAT increases, possible rising inflation, rising unemployment, and now you're talking about rising interest rates. Is there a real worry that we may face a double-dip recession here in the UK?
Yeah, well, I think it's important not to get carried away with too much pessimism. I mean, the economy's in better shape than it was 2 years ago. We're not losing 6% of output. There's a small risk of a double dip still, of course, particularly if consumer spending gets hammered as a result of the VAT hike and just general lack of confidence over public spending. But I wouldn't put that at above about 20%, really. The bigger risk is really one of a very slow grind recovery where the UK growth doesn't get back up to sort of historical trend levels of output growth over the course of the next few years.
All right, David, thank you so much. David Tinsley there.